Hey traders, this is Ron. Happy Sunday and happy holidays to everybody. As always, everything in this presentation is for educational purposes only. Daily chart of the S&P 500 ETF is on your screen. This is TradeStation, and I've added the two standard deviation John Bollinger Bands, which are the dark green lines. Now I had these on, a long time ago, took them off just to keep the charts more simple to look at. I'm bringing them back just for this video today because I want to talk about how the markets are sitting into year end. Are they overbought or are they oversold? You can do some research on the Bollinger Bands, but I can tell you quickly how it works. 90+% of the price data is going to be within these bands. When we close outside of the bands, whether it's an OHLC bar, a tick chart, I'm using candlesticks, that means we're starting to get overbought. If the entire candle is outside the Bollinger Band, that's an extreme overbought in a sense. So as we go through these different ETFs and stocks, I'm just going to talk a little bit about that. So the S&P is on our screen. Here we sit. We are not outside the band. We are not overbought. The strength here is with the bulls. If I come back here just as an example to October, you can see we not only got outside the bands on a closing basis, that whole candle was outside the band. And what usually happens next is an immediate reversion, a retaking, getting back inside that band. And it took 2 days, but we got right back inside. The oversold condition was resolved, and now the market can do what it wants. And then you see, we moved higher. So it's not necessarily a prediction of where price is headed. It just gives us an overbought, oversold in the very near term of whatever candle or time period we're looking at. So let's go to a weekly chart of the SPY. And even on a weekly basis, we are not outside that upper band. We're riding it. This is still bullish. So the question is, are we overbought using a 2 standard deviation Bollinger Band, which I think is a fantastic indicator? The answer is no, we're not overbought. Over here, back in December, a year ago, we were oversold. We finished outside the band. And what happened? Immediate bounce back and up we go. If you look back a year ago, October, we pierced the band on a closing basis, weekly basis. What happened? Immediate reversion to the mean. We go right back in. So how I would use it is, if I was looking to be bearish or short for simplicity purposes, I would not want to get short if I'm piercing a band, not on a closing basis. You're usually going to get a bounce, let it go back to some moving averages, maybe then reload. Again, not the best time to go short on a weekly basis. Why? Look what happened. Very next week was the bottom, and then up we went. Let's take a look at the Dow. We are not even touching the band. We are not overbought on a weekly basis using the Dow ETF. If I go to a daily chart, we're not overbought there either. Let's look at the Qs, the NASDAQ. Now here, I just want to highlight this. Here we broke out, and that day was 12/16, so 6 days ago from today. We broke out, and you might say, well, why wasn't there a reversion to the mean in terms of the stock pulling back, or in this case, the ETF pulling back? Two things. One, nothing is guaranteed. It doesn't work all the time. But actually, what did happen is there was a pause. The Bollinger Bands can also act as a pause. Remember, it doesn't mean reversal. It means it's going to get back inside the band. Well, the band was continually moving higher. We did get inside the band. So yeah, the Bollinger Band worked there too. What happened here? Here we actually had a down push. We hit the lower band, we go right back up. Over here in October, 1 day below, immediate reversion. You'll be amazed at how often this is going to work and show you short-term tops and bottoms, whether it's daily, weeklies, or even monthlies. All right, let's look at a weekly of the Qs. On the weekly basis, we're getting a little outside, but that is not much. You can see here too, we got outside, but also remember this, when you go through multi-months, weeks, or days, whatever period you're looking at of time, of consolidation, we can ride those bands higher. So this is normal price action. This is not extremely overbought whatsoever. If I go to a daily chart of the Qs again, consolidation, then we start riding the band. That's okay. When you see a full day's trading above or below a Bollinger Band, that is a yellow flag, canary in the coal mine. Let's look at the Russell 2000. If I zoom out here, this is a daily chart. Remember, the highs were September over a year ago, right? We're still marching up. We are not overbought. If I go to a weekly chart and I zoom in, we're only touching the bands after breaking out. This is not overbought at all. The target for the Russell are the all-time highs, back up there around 173. Go back to a daily. Let's look at the SMH, the semiconductors. Here's consolidation, right? Let's zoom in. Consolidation, explosion. This gets discounted a little bit in the sense that look at all this consolidation. Now we're getting a big move, but even with that close outside the Bollinger Band, a couple days later, it was harder to go higher. We get right back inside, we do a bull flag, and now there's an explosion higher again. Now the semis are leading, they're doing quite well. If we go to a weekly basis on the semis, if I zoom out, consolidation, consolidation, explosion higher. We're not, even on a weekly basis, 2 weeks we closed outside the bands, immediately went sideways for 3, and now we go higher. That overbought for those 2 weeks was immediately digested, and it's just resuming, re-energizing its upward trend. So bullish for the markets heading into Hanukkah and Christmas week. Next week is the new year. I would say this, if my outlook on the broad market, whether it's the spiders, Dow, it doesn't really matter. Go back to a daily chart. Some choppiness for the rest of this year. Some folks may be doing some tax selling. Maybe they've had some gains they want to lock in before the new year starts. Who knows? I would be surprised if we just go straight up in the last couple of days of the trading here. Because if you think about it, today's Sunday. We have a day here. This is going to be really light trading. We have 2 days here, and then really it's just Monday. There's not much action here. So there'll be light volume. We could see some larger swings because of the light volume, just like we saw last December, although I don't see anything on the horizon for the next 4 or 5 trading days that would show a December like last year where there'd be a big drop. But again, it's usually choppy the last 2 weeks historically. Let's take a look at KMX. This is CarMax. This had a big move down. Again, daily chart. We broke through the 50-day moving average. We've even cut below these lows. The target now is going to be basically the bottoms down here in 84. There was a couple tests, more than a couple, 1, 2, 3, 4, maybe even as many as 6 or 7, up around 84 and a half or so. 84 is a target. Now, how would I play this with this kind of move? We're outside the Bollinger Band. The volume is huge. 1.2 million shares normally. We're at 6.5. That's almost a 5-bagger in terms of volume. Could we keep going down? Of course we can. What's likely to happen from a probability basis? I'm not saying we're going to bounce back up, just a pause. And then the moment we're back inside that band, oversold is digested and down we go again. But the target here is bearish, 84. We are a little oversold on the daily chart. US Steel rolled over, losing over 11%. It too is outside that lower Bollinger Band. Target's going to be down there basically $10, almost another, 20% lower. That's pretty steep, but that would be the support area. Again, probably a sideways move. Could it go down another day just like today? It absolutely can. There's no guarantee here. But probability-wise, if I was looking at this for a bearish opportunity, I got to wait until it gets back inside the band. Apple, best stock of the entire year. Did close down a little bit on Friday, but I mean, you just go back to January and the stock was, 140. Now it's up at 280. Rock star, right? And it's amazing how many naysayers keep coming out of the woodwork with how the tariff wars, notice they choose the word war, they just love putting bearish stuff out on the stock and it just keeps proving them wrong. Put your fingers in your ear, hum your favorite holiday Christmas song, whatever it might be, and just go with the flow. Right now it's bullish. Yes, there's been 3 straight dojis, and then on Friday was a reversal off the highs, closed at the lows of the day. Volume was big. It was also options expiration. Just watch the 20-day. That's going to be the first sign that something might be wrong on the daily chart. Here is 3M. 3M had a nice little pop on Friday, up almost 2%. Again, volume picked up, but it was also options expiration. 180 is the magic number. Above 180, we are now at less than $5 away. 200 is a target, then the gap fill up near 220. So I want to keep an eye on that one. NVDA, which is one of the reasons why I wanted to bring the Bollinger Bands in, and I added onto the chart. We talked about NVIDIA even at the end of May at 130. It was almost just too cheap. And now it turns out to be $100 later, right? But there were rallies, there were pullbacks. And then once it got back above the 50 in orange and the 20 in red, it's been pretty good. There was that shakeout here in late November and the markets went up. But look what's happening now. We had this consolidation of early November into early December on the daily chart. Then there was the explosion, but now we've just gone vertical. When I see a stock like NVIDIA closing completely outside its upper Bollinger Band, which it did on Friday, this is one of those extreme overbought conditions. Yes, it could keep going, but from a probability perspective, remember 90+% of the prices data will be inside those bands historically. This is probably going to come back or at least go sideways. There's no way in heck I'd want to take a bullish position walking in on Monday because if I'm trading short term, this is completely overbought right now. It's probably going to come back to earth a little bit. I don't know if it's going to come all the way back down to the red line or not, but we should see it get back inside that upper band. Once that happens, then the overbought is gone and it's just flat out technically bullish again. So it is a little overbought at this stage. So that's it, a little longer video. Again, I wish you guys the absolute best for the holidays. Happy Hanukkah, Merry Christmas, Happy Kwanzaa, and Happy New Year. I do not expect to be doing videos every single night because there's probably going to be a lot of light trading. We're not going to have a whole lot of stocks to talk about. I would probably not be doing a video tomorrow on Monday unless something major happens. Maybe a video the 26th, and then I would come back to you guys on Sunday. So don't expect a video every night this week. Take time, enjoy it, and look forward to making 2020 another amazing year. Oh, one more thing. I had a lot of requests about the hot stocks for 2020. We had 3 events this month, all of them maxed out. I don't know that I can get another one in at year end. If I can, I'll let you guys know. But everybody that was in on Saturday, which was yesterday's event, y'all had that access to the copy of the hot stocks looking into the new year. Some have started to run. We talked about Netflix and gold and Adobe. We didn't actually talk about Adobe, but we did in other sessions. And once the calendar turns to January, a lot of these stocks just start to explode. So I want to keep an eye on them as well. If I can squeeze one more event in, maybe late next week, I'll let you know. But at this stage, I just don't know about the date. So now, happy holidays, Merry Christmas, and I'll see you guys next time. Take care.